Good early morning, people. Bruce with Targeted Wealth Creation here. Let me wish you a happy Thanksgiving week. All my best to you peoples. Okay, so let's jump on a weekly wrap up on gold and silver and the market. So we had a close at, oh, not 49.65. How about 4,065? You're pretty generous, Bruce, with that price. All right, 40.65. Silver was 50.04, down 0.4%. Silver down 1%. 1 month, silver's positive. Look at this. For 1 year, it just the pure metals up 50%, 60% in silver. Silver's really come on lately. 1 year. Let's look at all the variations of gold and silver, which people argue that are they really there with the JP Morgan custodian, et cetera, et cetera. I think it's reasonably safe to trade these, buy them, write options. Don't think you're owning physical gold. They represent and they trade as if they do. And by law, they're supposed to. But don't get fooled because you own a bunch of GLD or SLV thinking, hey, if, you know, the shit hits the fan, that I'm in really good shape, that I've got all this gold or I've got all this silver, even though it's reflecting the value in the marketplace, right? Physical will always be a better gig. Um, I tell people, a couple of you have asked, I said, hey, it's been over 20 years since I bought any physical gold. I have a lot of it, but it was all bought, years ago, and silver as well. So I still know companies. I follow some of them. All the ones I bought still exist out there, but it's a different marketplace than it was when I bought it. I researched it very heavily in those days. Um, so there's a lot of people, and you can do that on AI and Google and just say, "Hey, I was looking at these two or three companies. Do you think one's any better? What do you think?" And I give you my opinion. Unlike some YouTubers in the gold and metal space that run ads for the one company over the other. Is that really a better company, or is that the one that's paying them to say so? So I generally avoid that. I don't want to make nickels and dimes from you guys. I want you to get wealthy, hence the targeted wealth creation. Let's get you wealthy. And speaking of that, that's one of the reasons why I'm slowly going to evolve my YouTube channel more over the metals. Obviously, my Patreon is there focused. And a lot of my Patreons tell me, Bruce, I love the metals. What else you got? What else in the commodity super cycle? So I'm doing more and more videos. All of that content, when it comes down to what can you buy, what should you buy, what gives you income in those, and there's getting to be more and more of that. I'm always producing content on my Patreon. So I thought this is a general weekly update that I normally just do on Patreon. But since I'm not giving away any miners' names or commodity names and things to buy, then I thought I'll put it out on YouTube because I really want the people, the retail that's not in this space, which is a hell of a lot of you guys, okay? And many of you will be in the sixth and seventh inning. And then in the eighth and ninth, when it's running like crazy, you're going to say it's going to FOMO to the moon, right? And it'll crash eventually, right? It'll go down substantially, I should say. I'm not sure that gold will ever go back to $2,000, but when it's 15, it might go back to 6. And that's a crash if you're buying it at 8, 9, 10, 11, 12, 13, and that's all how you own it or assets around that, and it goes back to 6. That can get ugly, guys. All right, so let's cover the details. So on the ETF front, we are looking, what are we? GLD, again, not real gold, right? 53.2. It's a proxy, supposed to store physical, and you buy it, it's supposed to emulate gold, right? So you see the price works. It's just when it comes down to it, if we have a run and things all fall apart in the world, and you want to own the physical, good luck. You don't own it there, right? They say you do, So 53.2, 63 over 60 in the physical, right? 99.1% in GDX, the mid and large cap miners, because central banks and institutions are buying these, and people like me and a few of my followers and a few of other people's followers are going out early. People that are familiar with it, their dad told them about it, their uncle or their brother or their sister or somebody said, oh, yeah, I made a lot of money in that, and halfway understands it. Most people, especially the younger generation, they think it's an old dusty relic. Who in the hell would want that? We want digital gold. Well, how's digital gold working for you now? Not so well. Here we go. How about down an average of 16.5% between BTC and Ethereum over 1 year when you're up 50 and 60%? I'd say that's outperformance. That's a 6 or 7x outperformance, guys. So I'm concerned about Bitcoin not being digital gold, not being a store of wealth. So I'll get into that in a minute. So let's go through the 100% in the GDX juniors, 85%, almost 86% in the silver miners. Silver has moved a higher percent than gold, and it has more leverage. It will play catch up. It will run over this next 5 or 6 years a few times higher than gold will percentage wise. So if gold goes up 3.5 or 4 times, silver will probably go up 6 times. Very explosive when it runs, very volatile. Okay, like crypto, in that's closer to crypto than gold is. So 85.7 for SIL, 84.5 for SIL-J. By the way, Amplify is the fund family that owns SILJ. It's had it for about 12 years, and it has a monthly paying income the way Yieldmax used to on GDXY before it went weekly. And it's on silver miners. Gotta love it. That's going to be a fantastic. It's only targeted around 20%. But it's got a lot of upside. They're only writing calls on half the portfolio. So I really like it long term, guys. SIL or SLJY, Amplify Silver Miner Covered Call Income ETF. Been out about, I think, since September 30th. So going on 2 months. All right, indexes. How we doing on the market indexes? Well, for a year we're okay. As soon as we go into the month or the week, well, of course we've pulled back. I mean, gold's up 0.1% on the weekly basis, but these are just retracing, a small portion of what they've done. These numbers were up substantially higher before these pullbacks happened. I mean, hell, I was putting in my videos in May and June and July, and people bought those. They were up 100% on a lot of those miners in 2 or 3 months. Now, if you bought in October, middle of October, at the peak, you went down 25% at the worst on your miners. You're not quite down that level now on the average miner, but miners have leverage the gold, so they go down more than the metal when the metal goes down, but they go up more than the metal when the metal goes up. All right, so the S&P, nothing impressive, but these are close to normal averages. The S&P somewhere around 12, maybe 15 with dividends dripped included. I expect these numbers to decline over the next 5 years. I'll bet you the average S&P is 3 or 4% over the next 5 years. The Nasdaq might be 4% over the next 5 years. So outperformance leads to underperformance. And I think it's very realistic that you average these kind of numbers here. 40, 50, 60% average in the metals over the next 5 years. And these things will vary, right? But they'll be up. They'll be up substantially over these. So I say, where do you want to put your money in a capital rotation? Most of you haven't figured this out and won't figure it out. We're in the bottom of the third inning now. You'll be here in the seventh inning. It's just the way money works. I will just say, so is the digital gold myth holding true? Is Bitcoin really digital gold? Not looking like it, is it? Here's another thing. I sort of had to think about this one. I've known for some time, been waiting for the next commodity super cycle. Watch Bitcoin. I like Michael Saylor. I said, hey, there's something here. This thing's continue to move up, averaging 35, 45, 50%. The pullbacks are brutal, but but that's to be expected on an asset that does that. We'll have some of those. We'll have 150% pullback in the metals, and that'll happen somewhere in our seventh inning. It has in the last two commodity super cycles, so I'll be ready for that one. Otherwise, you're talking about maybe a 20% pullback on the metals. They vary between 10 to 12, 16. Occasionally, you have an 18 or 20% pullback in the metals, and then one and a half times that in the miners. So the miners can get volatile when they pull back. But if you buy them now and hold them for 6 years, you're going to be substantially higher. You're going to have 3 and 4 baggers in your very large cap miners. A 5 bagger on one of them that I really like, but only I tell people in Patreon, large cap about that one. Okay, I would just say there's considerable doubt. So the digital gold narrative is severely wounded, people, if not dead. I don't want to say it's dead because it's got time to prove itself. But if Bitcoin isn't digital gold, maybe it's something else entirely. A speculative growth asset, a technology play on Bitcoin adoption? Huh, likely. Whereas I was looking for that misspelling. Whenever I see that, they drive me crazy. But I'm going to ignore it for now, guys. It's not important. Okay. So it's been clear for some time. Okay, sorry. A speculative growth at a tech, oh, there it is, a technology play with the I don't know, Warren. I'm not going to worry about it. All right. A hedge against specific types of monetary policy rather than a broad safe haven. But it's clearly not the inflation resistant, volatility dampening store of value that gold has proven to be for over 5,000 years. So it has been clear to me for some time. I've been in Asia for a number of years, was in Mexico for a year and a half during COVID, and in the States a fair amount. So it's been clear that the younger generation, I talk to people in convenience stores, I talk to people in the supermarket, I talk to people all over when I travel in Asia. And I ask them flat out, oh, what do you do? How do you make money? What do you like? And almost all of them, whether it's their full time job or not, say they trade crypto. Well, that works in a bull market. If you're really good and you can trade, it works in a down market. But a lot of people don't like bearish. Yomax came out with bearish funds. Those funds were hardly utilized, right? Because people don't like to think bearish. So I say to you right now, first off, why on earth would you buy a high yield income fund? I know why, because you're greedy or you need money. So if you need money, why not get the one that pays the most? Well, did you listen to me when I told you it's not about yield? It's about total return. So if you got a 40% yield and the value of the stock went down 50%, did you make any money? Oh yeah, they gave me 40% of the money along the way. Oh, okay. Well, what happens if you have to sell it now? Oh, well, yeah, it's down, but I'm holding it till it goes back up. Good luck with that, guys. Violates everything I can think of logical. It's not that it's not logical, it's very logical. The psyche, trading is a psyche. Owning something, admitting that you made a mistake is difficult. It's difficult for me, it's difficult for everybody. Nobody wants to sell something and say, that's a loser, I screwed up. But I don't know anybody that's been in the market any number of years unless you're, a fanboy YouTuber and you just espouse all this success without any experience or any length of time in the market. Anybody can look good in a year if they're in a sector that's doing great, but you know what I mean. You get the idea. So it's harder going backwards, guys. I'll tell you a story, right? So what I mean by that is when crypto goes into a winter, if you're really a good trader, then you could trade crypto every time it goes up, you sell it short, right? You just do an inverse. Well, that doesn't, psychologically, it's harder to do. When I was supporting Asia before I retired, the whole decade of the 2000s, when I was discovering gold and trying to figure out how I was going to recap the wealth that I lost in the option values of a big tech company I worked for, incentive option, and stock that I bought at a discount as an employee as well was soaring. It was way up. That company was the darling of the New York Stock Exchange for the decade of 1990 to 2000, massively up. And then it wasn't. It and everything else was. It and Cisco, right? And Microsoft and a few others. They weren't the darling anymore. The NASDAQ went down 90% in 10 years, 85 to 90%. In 10, 12, it took it 15 years to get back to even. So 5,000 down to sub 1,500, back to 5,000. That's brutal. That's ugly, guys. So the point is, can you make money in a down market? Yeah, it's just not as easy and psychologically. So I was telling you that I was supporting Asia and I was flying over and I would always fly business class. So I was in a Star Alliance. I flew a lot of United and the United Partner System on Star Alliance. And they reconfigured the upper decks on the 747s in business class at one point, where they had rear facing lie flats. So the only lie flats I had flown in, even in the upper deck, were all forward facing, right? That's when you get on an airplane, mostly all the seats are forward facing. Well, they reconfigured business class to have, half the seats facing one way and half the seats facing the other way. And I'll never forget somebody coming on board. And I was on early. I was having some champagne, sitting up there, relaxing and reading. And they said, "Oh, can I change seats with you? Do you mind?" I said, "What do you mean, do I mind?" They said, "Well, I can't fly backwards." I said, "Well, technically, you're not really flying backwards. You're just looking toward the rear of the plane, but the plane's going forward." "Yeah, yeah, I know, but I'll get sick." And so anyhow, we had a discussion. I won't tell you the eventual outcome of that. Actually, somebody else, the flight attendant got somebody else to volunteer. I never gave a definitive answer. I thought it was strange because to me it wouldn't have really bothered me. I probably should have just said, "Fine, I'll switch with you." But I get so used to like I want one where my left arm is in the aisle. I'm left-handed. But when you're in business class, that doesn't matter as much as it does. That's why I get an H aisle on a big plane if I'm in economy or even in business class, I want my left arm to be free because I'm broader through the shoulders. And if somebody's sitting tight, I want my arm out. All these things. When you fly a lot, you learn all those things. I always use Seat Guru. I always got the best seat or the best I could. So anyway, I was trying to say, see how some people they just could it was psychologically hard. A lot of people some things are psychologically hard. So in this world of central bank buying, what's causing gold to go up? Well, I say it's a super cycle phase, right? So all the people trading crypto and all that may find it more difficult now. Certainly some of them are losing money, not as good a trader. But this super cycle is indicated it doesn't really matter because this is what I had a thought early this morning laying in bed. I woke up and I thought, I'm always fearful that the commodity super cycle is not going to be good for gold and silver because clearly in the 2012, 13, 14, 15, 16, even through 20, we had one little blip up. Gold wasn't doing very well, and crypto was doing great. Sure, it had big pullbacks, but it had big, massive run up. Spearheaded by the younger generation calling gold a relic, and everybody saying it's never going to amount to anything. It's your pet rock. And yet here we are, okay, because crypto didn't exist in the last commodity. That was the epiphany I had laying in bed this morning. Crypto wasn't around. So from 2001 to 2011, I can't compare it. I can only say in the lack of a commodity super cycle that gold was very average from 2012 to 2020. Didn't do much. Until 15, it was down. It bottomed in December of 2015 at 1,046. Well, it had been 1,000 in 2007 going into 2008. And then when the Lehman Brothers hit, it got knocked down to 700. But after it got through that into 2009, it started moving. And it went 2.5 times up from that 700 to 1920 in 2000, and I think it was April of 2011. I forget, gold had its high one month, silver had it a different month. Somebody was August, somebody was April, I think. So bottom line, and silver moved many more times than gold. I think silver got knocked down to $7 or something, 21 to 7, 24 to 7 in that 2007 through 2008, knocked down into 2009, and then it ran from that $7 or $8 to $50. That's what silver does. That's at the end of the commodity super cycle. So this last run to 50, several of my Patreon said, Bruce, is this the end of it? Is this super cycle over? I said, no, we're in the third inning of a 9-inning game. We're far from over. I've got a target of $250 silver. Could exceed that. But anyway, getting back to the relevant stuff. So the central banks are driving it. It's not FOMO. It's not retail. Nobody in retail is in gold and silver in the miners. Half of 1%. It's got a 3.7 billion or $3.7 trillion market cap, less than some of the Mag 7. The Mag 7 probably averages about 2.5 to 3 in each one of the companies, right? NVIDIA hit 5 trillions, 4.5 now, arguably. And yet all the gold and silver miners in the entire world are 3.7 trillion. So all we need is a tiny bit of that money, which means if they start underperforming, what's going to happen? In the next 6 months, year, 2 years, a lot more money is going to come out that's been chasing FOMO, AI, and the Mag 7, and they're going to go into gold and silver and the miners. And not only are they going to go up, they're going to go up massively more, and they're going to get re-rated. They only have PEs of $9 or $10 of many of the very profitable gold and silver miners. And yet you're averaging like 22 in the Mag 7. So the gold and silver miners get rewarded with new money coming in because what worked before isn't working. And so they're coming in, and the late people, right? The late retailers coming in the seventh inning, they're all out preaching it to everybody. And those are the ones that didn't sell at the top and ride it halfway down before they figure out that it's top. Just like they didn't see the top here. We're practically here. Is it 2 months? Is it 3 months? Or did it already top? Difficult to tell. But it won't be on the next where you buy the 30% drop on the dip and it never gets back up to the top again. That's what will change the scenario. All right, guys, I don't need to. So retail's always moved in late, stayed too long, okay, in capital rotation. Capital sector rotation. It's the early movers who make the real generational wealth. I'd rather be early than late. All right, let's look at charts. These are kind of fun, guys. I'm going to save that pitchfork for the end. So I upgraded my trading view on a Black Friday. No, I didn't post it on here with a link so you can save $15 and I can get paid a commission. It's not what I do, guys. I stopped interviewing the CEOs. You know, I don't want nickels and dimes. I'm here for millions. And I'm here to help you understand and how to play this. That's why I created a Patreon. So normally I don't do any more of my miners and metals videos because not fair to my Patreons. But in this case, I'm not giving recommendations on stocks. That's where I vet stocks. That's privilege. That's to save. Okay. But I do need to keep a YouTube going so that I can even source and get people to my Patreon. So consider yourself lucky that I'm doing this one, and I'll do them periodically. Okay. I do prioritize my paywall people. They're willing to give up a little money. I'm willing to give up time, energy, and effort for them. And I got a great community so far. We're close to 280 strong now in 3 months, guys. You know, it's just, it's phenomenal. I love it. Just absolutely love it. I got plans for an additional tier. I'm going to do follow me on option trading. I'm teaching a lot of options over there. So at the end, I'll have my Patreon, which some of you know, and I'll have my email because when you come over there, and you're in a $10 or $5 tier, and it doesn't include a 45-minute call once a month like my top tier does. But you want to call one-on-one to consult with me and talk to me. How do you close out some of your high yield? Where should you be? You still need income. And how can you play this commodity super cycle? That's what those calls are about. They're all tailored, they're open-ended. You share with me your portfolio. You ask me what you want to help. I don't come in with an agenda. I don't have something prepared to show you. I just react. Okay. I know this stuff cold. I think that's evident. Most people understand that. That's why they want help. Okay. I've gotten help from people over the years. I never forgot that. I went into teaching math when I got done with my high tech career. I made like $20, $25 an hour. It's like, 1/50th of what I was earning at the end of my high tech career. It wasn't for the money, it was to help people. Do you know the smile I got on my face when I got through a third grader who had just given up on the multiplication tables and had no progress? I found innovative ways to reach people. It's how I do when I teach options. I don't teach. I created options 101 on a video, one of the first videos I did on my channel. It's kind of old. The camera wasn't great. Some of the stuff. It's a little boring. It's gammas and Greeks, and this is the definition of a put and a call. I don't teach like that anymore when I do one-on-one options courses. I'm actually thinking about doing a group course and get 5 people in because it's really taking up time. So anyway, if anybody's interested, that's great. Let me get to the topic here. All right, here we go. So you see this wedge, here's gold. And I don't have this live. I took a snapshot, although I think I closed them out. But I do have some still live ones in my trading view. I love it now. I love what I can do in there. So bottom line is we got a wedge. We moved, right? This is your May, June, July, August, right? We're moving. We start moving up, like flat line for 4 months, up and down, but within a range. But we had moved up, a year, 14 months before from 2000, broke to new highs, and then we base, right? This can be seen as some form of consolidation. We had a small consolidation here for 20 days or some period of time. What's that? 8 to 2, yeah, about 16 days. So when you take the bottom, right, when you want to see where it's tested, 1, 2, 3, 4, 5, 6, 7 times we've tested this wedge, the bottom support line of the wedge. We've only tested resistance 1, 2, 3, 4 times. So when you're knocking on this constantly, you increase the probabilities that you break down. So what's going to drive an up move or a down move? Okay. For those of you that have seen some of what I talked about, especially in my Patreons, because I'll be posting this on Patreon. It's just I happen to be putting it on YouTube. So everybody on Patreon will see it, everybody on YouTube. I talked about an A wave down, a B wave up, and a C wave down. And when you go down A, B, and your C is pretty much equal to your A, it's known as a flat. Very common retrace structure. The more common is where your C wave comes down and a greater. So where is support? Well, that's here. I think 3,600, but I'm showing this little, period before it congested. So I favor 36, the top of this small box. That's kind of the maximum I expect. It may not go there. It may come 39 ish, just maybe broke 39 by a hair, a few dollars, is also could be a C wave being here. This may turn out to not break this, or it may have a false breakout, not confirm the next day and come back in the wedge. And if that happens and we do break out, now we need to get above this line then to really validate it, but it breaks out of the triangle, come back and test the triangle, gets through here, we're off to the races, guys. So I've got that scenario for you. It's both good and bad. I'll tell you what I mean by bad, but it's terrific short term. So that's my scenario. That's the purpose of the wedge, okay, which could be an ABC retrace. All right. So if we hit the bottom rail of the wedge pattern more times, like I talked about, which we have, it indicates a higher probability of breaking down in a lower C wave to major support at 3,600, what I told you up there. There's also support at 3,900 and there's support at 3,800. So both those, probably 3,750, 3,900. If we break both of those, it's going to call out 3,600. All right. So what I also did, this really got me thinking. I was studying my charts. I was looking inside TradingView. I was saying, okay, I got a wedge. And I remembered about 14 years earlier, I had a subscription to a great, great chartist. And I'll never forget, I had an Edwards and McGee handbook. I studied charts as well. And I never forgot. There's a lot of new age stuff. There's all kinds of new age stuff about analyzing charts and stuff. I'm kind of old school. I'm more of an Edwards McGee. I'm, head and shoulders. There's just certain common patterns, wedges, triangles, a lot of things. I mean, there are many patterns, but I like that. And I got to thinking, is this a halfway consolidation? So if we broke out here, it's not like, oh, okay, well, we're going to go. But there's a particular, what you call a halfway consolidation. So you have half of the distance up here, you consolidate, a wedge qualifies, and then when you break out and move up, roughly, this is the half the distance. You can drag this line over here, or you can say in dollar amounts, like 1,080 worth of gold, you want to see at least that in that second half. Percentage isn't going to work because you're coming from a lower number and moving up. So this is a 32.6%. This is only a 28, and I'm actually showing about 1166 instead of 1080, which you can have a slight variance. That means in a halfway consolidation, you're going to go at least double that. And the time frames will be very similar. So you notice I could have drawn this a little tighter. So you almost get a second angle. I could have just cut this out, drug it over here, and put it top of the triangle. But I got close. I went to about the beginning. So I went probably 3 months. and this was more like a little more than 2 months, but you get the gist. And guys, 53 is the target, 5,300. So if we do that, if this stops here and doesn't really go down, I mean, in theory, it could break this a little bit, but doesn't really get to 3,900 and stays here and then shoots up, we could easily get this scenario and run to 5,300 goal in the first quarter of 2026. That's the good news. The bad news is if this scenario plays out as I show it, then it sets us up for a larger pullback from 5,300 goal. And then we retrace to this 36, 39 area, which is a much larger retrace. And it certainly could happen and most likely would if this scenario plays out, because this would be a minimum. It's like a 12% just a quick consolidation. And this is a more substantial retrace. I'd have to do the math. What is the math on that? So I could draw, oh, I don't have my tools in here. I took an image. So if I say equals 5,300 minus 3,900, let's pick the first number. So it's 1,400. That's a 26%. Let's take it down. That'd be 300 more at 3,600. So let me divide by 1,700. Yeah, 32%. That's probably what you'd get. You could easily go back to 36, a more substantial. But look what you got out of it. Look at you ran from 3,300 to 5,300. Massive, guys. I mean, this matters, but it doesn't matter once you break out. And then you get a healthy one, and maybe that lasts 6 months before you work your way up to 7 and 8,000 gold. So, guys, that is what a commodity super cycle is all about. It's what is about working with somebody who understands them, understands the chart patterns, some probabilities, different kinds of things. I'm not perfect. I'm not going to pick all the top. I also tell people, look, in this scenario, I own close to 49 miners. So there's a lot that even though I know it's toppy, and when it starts here, I go, okay, I know what we're doing. We're going down in an A wave. We may bounce, but we're probably going to go back. I wasn't thinking about the wedge. I wasn't thinking about a halfway consolidation, but it doesn't matter. 80% of my positions are non-tradable at this point. I don't have stops on them. I don't want to have stops on them. I want to own those throughout the cycle. Okay. Now, what you can do is go in and say you want to buy the biggest gold miner, Numa, and you want to buy 500, 300 shares of it, and that's your core position. And then you bought 150 to trade. It's beautiful, not a problem. If you're a good trader, you can make some additional money and write some covered calls when it's run. What a great time in here to sell covered calls. Out 2 months. You made money. You got to keep the premium. You didn't give up your stock. But it's even better if on your trading shares you did that. Because if you do this enough times, you're going to be wrong. You're going to pick a top that's a quick flash where it takes off. And I'm waiting on a C down here. May not get it, guys. That's why I brought this up. All right, so let's keep moving. So what could cause either direction real fast? So what's going to make it go down to 3,600, and what's going to have it consolidate to 39 and break out and run to 50 through very quickly, like the previous 2.5 months did, from 3,200 to 4,300? So On the downside, it might be further liquidation. So something that could create havoc in gold is just a liquidation sell-off in the Nasdaq and the S&P and the general markets. Okay. So big tech gets illiquid, right? Sells off. And then what happens? Margin is at historically high levels, record high levels. And when you have that and you have a 10% drawdown in indexes and liquidity crunch, margin calls happen. You throw the baby out with the bathwater. You throw winners, losers, you throw everything out. And so everything goes down. And the good stuff goes back up much quicker and much faster and much higher percent. So I'm not worried, but that could happen, right? We could go to 3,600 in gold, and I'll show you on silver because of margin calls, because of other things. You know, this NVIDIA is not looking good. The scandal around that with the incestuous money loop and the depreciation over 10 years, 7 to 10 years, when the asset loses 90% of its value, these expensive chips in 2 years, all to show better earning. So how about a black swan event? We have the beginnings of a black swan event right now, let alone, you know, Ukraine, Middle East, Iran, Taiwan, right? You always have something hanging out from a war cycle. But the black swan event I'm talking about is the Japanese yen carry trade. Do you guys understand it? Do you know what it is? Do you know that Japan has 250% debt to GDP, one of the highest in a first world country that exists? Germany, Japan, or Germany, France, England, America, we're all in the 120, 130% camp, a little more. That's historic. That's ugly, guys. That's not what we were the last time we were at. You know, we were at much different levels of debt. So this commodity super cycle could get even worse. Commodity super cycles happen with the paper value losing its paper fiat money losing its value. So commodities are real things that you need. You need to eat them, you need to use them, you need to have them as a store of value. There's all kinds of things that commodities do. So this yen carry trade, guys, with this debt level, Japan has tried to dig its way out for its stock market, the Nikkei, for 30 or 40 years. It's had incestuous low levels of interest rate. And after the rest of the world started to rise, and we no longer have those 0.5% and 1/4% like Japan's had, the rest of the world is still going over and borrowing money in yen, converting it to their own currencies, going and buying stocks in America, and buying stocks in other first world countries. Crypto, a lot of money going into crypto. And why is it a black swan event? Because their interest rate on their 10-year mortgage rate, their 10-year treasury rate, has gone from under 0.5%, right? Probably 1/4% to 1.8%. You do not undergo a rate raise, right? And the free market is taking it there without understanding that something is happening. And so all that money that's been flowing into those assets around the world has stopped flowing into them. That may be the precursor to the markets coming down. And who wins that? The commodity super cycle wins that scenario. I hope we don't have 5 or 6 years of a down market in the Nasdaq and in the S&P. I'm thinking just low levels, okay? But either way, you will win in the commodity super cycle. So, guys, let's look for fun. So, that's kind of the scenarios. That's what could cause one to go up, right? And also what can cause it to go down. So, I can see logically either way happening. So, for fun, because I did a Black Friday deal, which has still got another 5 or so days, guys. So if you want to buy TradingView and you like that, and you're a trader, you like to analyze, you need to go through a lot of learning on it. Even though I know a lot of charts and I know a lot of technical analysis, I had a lower version. So now I have increased things that I can do and capabilities because I bought a higher tier. And I'm having to learn some of those things as well. And it's fun. So I went in and I used the pitchfork capability. I hadn't used it in a long time. And basically, you have a central line that you attempt to show some base level, right, over this 3-year area and say, okay, we've broken out, we're rising. Where could we go? Again, guys, it's technical analysis. It doesn't mean it has to go there. Technical analysis to me in the short term is excellent. What I use for things going long is fundamental. Like understanding there's a commodity super cycle. Why would I be investing in something that I see, even in a high yield income fund, that I'm bearish for the next 2 years on, or 6 months, or 4 years? Wouldn't I want to go into an asset that's positive? So while I'm earning yield, the asset is growing. That's hard to do in income funds that pay a good yield, because if you're in yield max, you only capture a third of the upside. So when MicroStrategy was running 3x, 2 and 3x a year, then you're getting 80% gain, right? You're not anywhere near capturing what MicroStrategy was doing in Misty, but you were going up and then you were being paid a lot of money. But any fool can see that that doesn't hold place forever. It can't. And this commodity super cycle will have a defined period. But boy, can it be good in that period. And do you know how to maximize it? Do you know how to use options? Do you know how to read, charts? Do you try and understand what it's done in the past? Do you know how to vet a miner? It's not like any other company in the world. Digs gold out of the ground, digs silver out of the ground, doesn't require customers, doesn't have to market. Well, it markets a little bit at the gold and silver trade shows because it wants to get the retail people in. The institutions are already going in, and that's in the smaller cap, mid cap to, explorers, developers, where they really have to do some marketing. Because there's a lot of fraud out there. There's probably only 25% of all the miners are legit. And then you have to vet those. Do they really have, even those that aren't crooked, right? Which is probably 5%. The other ones just don't have experienced mining teams. They're never going to build maybe a successful mine. They're going to borrow money and they're going to fail. So I vet those, and I put out my top 25 10-bagger opportunity miners. It's $10 a month to be in that tier. I update it. If anything changes, report on it. Now, is it guaranteed? Of course not. It's speculative, but I'm betting on a 10-bagger with 5,000 gold and $75 silver. I think silver goes to 250. I think gold goes to 15,000. Right? It goes to 8 in the worst case scenario I'm showing. So I was expecting those 10-baggers at 5,000 gold. So guys, you can make a lot of money in this. Okay. Don't try and trade. Don't buy one. Don't pick one of the 25, because you may have picked the one that only goes up 3 times. And then you're writing, well, this is not a 10-bagger. I screwed up. So you know what I do? I own them all. Well, that's a lot of money. Not necessarily. You could put $100 in each one. You can put 500 in each one. I typically put 2,000 in each one. That's why I have 49 miners. Then I do options on the indexes. Sometimes I do options on the individual one. Sometimes I go super long and buy leaps. Sometimes I sell puts. Sometimes I buy 2x indexes. If I don't want to sell some of my stocks and I know they're going down 25 or 30%, I'll load up on a 2x bear index, ETF index, something like J Dust. or I think dust is the equivalent of nugget, and J dust is the equivalent of J nug, the juniors. So there's all of those things. You can do that in a lot of the high yield stuff. Only typically the bearish funds, I don't get any yield on those bearish funds. That's not their purpose to pay me. Their purpose is to act as insurance. All right, guys. So let me get ready to wrap this up. But this is fun. This is looking at this median, this midpoint, and saying, look at this channel, look at this parallel channel that I have here. So that's how I can see that if I just stay near the midpoint and I get toward the end, the fourth quarter of 2030, I'm showing 8,000 gold. If I come up here and at some point even break into the blue tier or bump up against near the top, I'm up above 15,000. Same time frame. So guys, this is what happens, right? All right, let's jump into silver. I need to move through this stuff. All right, so here's silver, same kind of a parallel. You could come over. The difference is silver, when it went down at top, same time frame, October 16th, give or take a day, came down in an A wave, moved back up in a B, and its B wave gold stopped about here. 2/3 of the way up on the retrace. Silver went right up, and that interday was a few cents higher than the interday over here and setting a new all-time high in silver. So it's similar wedge. I just didn't show it exactly as the wedge. I need to shrink this down and move it over a little bit to the left. But I was trying to go faster and get my assets here quicker. All right. So silver is definitely more volatile and a much smaller market cap than gold, guys. A billionaire could go out and buy all the silver. So if we look back to COVID 2020, which is where this did, I can't pull it now because it's not live anymore. I took an image to throw into my Excel and talk from. We go back to 2020, silver, and then I put in, so I used that low, drag the line up here with the fib tool, bring it down to where the bottom of I think silver could go. So we got two plays with silver, just like with gold. It could not go much lower than right in here, break on out, because if gold does that, that's what silver is going to do, and it's going to follow. My guess is silver goes to 65 or 70 when gold goes to 5,300. Goes up a higher percentage. Okay. But in first quarter, so in the overall scheme of things, it's a normal retracement. If it does an ABC and it comes down, the bottom major support is at 39 and a half, close to 40. You've got support at 42. You got support at 45. So you could stop at any of these levels in your C. You could do a equal, right? Which is about 40, almost 46, high 45s, right? Depends if you add the tail in here or not. So we could have an ABC where you have an equal, what they call a flat. So your C is flat. Again, we could not have a C at all and just break out here. Or we could get down this low. I'm hoping we get somewhere in here, at least to 42, because I'll load up like crazy on options. And I'll use the index. It's always safer than a single stock. So guys, this is an opportunity, right? So I'm watching this likely will get determined for both gold and silver in the next few weeks as to which direction. So once I found that halfway point, I said, oh, I can see how this thing, what that changed, what made that different than an ABC only was that halfway point, that you go up the same distance roughly in the same time frame that the first half of the leg went up. But that's why then that leg becomes one big giant leg. And now your retrace is 27, 30% or something. So you have a bigger retrace. And that could mean the miners going down 35%. But think of how much higher you were, guys. Think of this when it breaks 50 and runs to 65 or 70, maybe even 75. Your miners are going to double, your silver miners. And the gold miners are probably going to do really well. So let's look lastly at platinum. I didn't do palladium. I'll do it next week on the weekly wrap up. And I'm going to go fast. So looking at 2025, platinum has been moving up pretty nicely from this flat area, which is sub 1,000, right? More like 800. And it moved over 1,600, right? It doubled. And now it's pulling back. Could this be a bull flag? And we just go down here, 1350. That's what I have as is kind of the ideal target. It's support here. And if you go back and you look almost over into 2020 after COVID, that's a spike pivot right here, which measures 1337. So 1350, 1400 look like pretty solid support for this thing doing where I think gold and silver could also go if they don't do the quick breakout and run to 5,300 gold and 70 silver and all that. So platinum looks healthy, but it's vulnerable. This is a big 100% move up, right? So if it goes into this level, that's I have to calculate the percentage, but that's all right because then that retrace is done. All right, guys. So how can I help you? So I'll do a few videos over here. I'll still do some of my high yield comparison. But guys, it's foolish for me to recommend many high yield funds that aren't commodity super cycle. There's more and more and more. I keep doing more things from my Patreon because they'll say, oh, I got this income fund in gold. I got this income fund in silver. I got another income fund in gold. And then I got all of my miners for growth. So what else you got for income? What other commodity? So I'm talking to them. I just put a video out last night that was on other commodities, right? I don't need to get into it to you guys because you need to come over to Patreon. That service is a hell of a service for a small amount of money, guys. It's pennies. By not being in it, you're losing out. I can tell you that seriously. And I know some of you have come over there. I get a lot of people. I was surprised when I opened. I didn't think anybody was come over till I started putting content. I had quite a few people. And then I still get people that call me and say, hey, Bruce, I bought those miners back in June. Thanks. Everything doubled. I'm down, I'm not down. I'm just down from the high they went to, right? The only people down are the people that bought very close to the top. But we don't always know the exact date. I'm not here to tell you I'm going to pick every top and sure in the hell not pick every bottom. You see what I'm telling you? I'm telling you probabilities both ways. And then I just found and discovered something in the back of my brain about a halfway consolidation that I'm really excited about. If it breaks higher, now I have a realistic target and how quickly we may have that target. Now, that isn't going to come out in the news. Nobody is going to say that. They're all going to say that happened because of X, Y, and Z. Sometimes I find technicals. I know where something is going to go with a probability. I have no idea why. And then a story comes out and somebody else said, well, that happened because of this. I said, no, that happened because the chart spoke to fear and greed and probabilities. That's why it happened. But we love to say why, right? So that's why I gave you some whys today. Why did NVIDIA sell off after having fabulous earnings? I told you a couple reasons on that. Number one, chip stocks got stretched to 102% for the third time in 5 years, guys. They're very vulnerable. Now you had two things circling NVIDIA. You had the companies depreciating these expensive chips to make their earnings look better over elongated periods of time when the real value of the chips declined 90% in 2 years. These aren't the chips you and I buy. These are the super fast, really expensive chip. Three reasons. I take it back. Got that reason. Second reason. Data centers are getting canceled. Jurisdictions and areas don't want these massive, giant data centers near their city. They're encroaching into those kind of areas. They don't necessarily want them. The power companies don't have the power to support the megawatt that they require. They suck up tremendous amounts of power. The power grid is 50-year-old grid and 30-year-old grid, depends on where you are. And they don't have it. Nuclear is one of the only base loads that can really support non-intermittent power. These need consistent power. They run 24 by 365, guys. So that, and then add a third thing, the incestuous money flow. NVIDIA, when they reported earnings, they had fabulous, like I think 19.4 billion in reported earnings. But what did they actually take in? They only took in 68% of that money. Normally, a company is at 85 to 90%. You know why they didn't take in on that revenue? Because these orders aren't all real. They're orders that are subject to being canceled. They're orders, and NVIDIA said, well, just give us the order, but you can pay later. That's not what you do when demand is so strong as Mr. Wong has reported. So it's a little sketchy. This is the first time I've seen it sketchy, but there's a little sketchiness. You know, the whole open AI thing and Microsoft and the Mag 7 that want to beat each other by deploying these massive data centers. They're getting turned down by the power grid. They're accelerating they're shrinking they're accelerating out the depreciation schedules to make their earnings look better. And then the chips are losing 90% of their value in 2 years. They have to be replaced. I mean, you imagine selling a chip for 10% in 2 years on your investment, only to buy a more expensive but faster chip. So you have to. So there's a lot of stuff that doesn't feel just right. And I'd already called out the chips were fundamentally due to pull back. And the chips are the growth. I mean, look at these semis over the last 6 months. They've been massively run higher. Everybody's launching. Yomex launches semi. I think it's semi. You know, Granite's got one. It may be semi. But they're all over the place and everybody's diving in. And I said, guys, watch out. I shorted the SO. I shorted SMS through SOXS. Close enough. It's a 3 times bear semiconductor ETF. When NVIDIA on earnings bounced, I said, well, I don't want to lose this. So I sold. It still had a 30% gain in like 7 days. I think it can be a 90% gain because I think there's 30% more left to go. We shall see, guys. Again, I don't, I'm not going out and I didn't even tell everybody the day I did it. I didn't tell somebody till a day or two later because I don't want people following me when I'm leading edge on some things because I'm not absolute. I feel strongly that it will, but it's not like a commodity super cycle where I know where these miners are going to be in a year or two. Not the exact date, not the percentage run, all of that, but I know how the cycle plays out. And I pretty much know who the winners will be. And that in itself is expertise worth sharing, guys. So, speaking of that, here's Patreon. I know many of you see this. I do it in most of my YouTube videos. Here's my email address. Why do I put that on there? It's on my channel. But if somebody is going to join a tier and they come into the $10 tier, and in the $50 tier, somebody every month gets a 45-minute consulting call, one-on-one with me. If they want that, they can just buy it. Just send me an email and say, I'm afraid to sign up for $50 a month. It's above my pay grade, but I'm willing to pay you $50 for a call. I only need one call. So fine, do that. But you can't do that in Patreon unless you email me, right? There's not a tier that supports that. So that's why the email. And then ask questions. I've got a new tier coming, guys. I'm really excited. A follow me trading on option. I'm teaching a whole bunch of people options now. And in that process, two people have said to me, I really wish, I can get the fundamentals down. I understand to put a call. I know how to do it, but I don't always know the best setups. You understand the commodity super cycle. You know the setups. You talk about them in my option class, but I'm focusing on the mechanics. So if you put the trades out there that we should be taking under, I'll sign up for that tier. And I thought, okay. So that's what I'm in the process. That'll probably be done after the Thanksgiving weekend. And that's how I want to help. Also, if you come over on Patreon and you're in the free tier, I'll teach you options. It helps everybody. But I may go to groups. Right now I'm doing one-on-one. And I like that because I can really help somebody. But I think I can do the group class, three, maybe five at the most. We'll all be on boys together. I don't teach it like a school. I don't go out and show you a slideshow. I send you to your brokerage. We talk about a stock. We look at the chart. We analyze it. We talk where we think it might be going. Are we bullish? Are we bearish? Is it near a top? Is it near a bottom? How are we going to play it? We're going to sell a covered call. We're going to sell a put. We're going to buy a put. All the strategies. Are we going to put a spread on? We're going to do short term. We're going to do long term. I do it to interaction of you getting your hands on the tables and studying them. And I explain open interest and I talk about spreads and volume and open interest. And I talk about selection of which strike, how to work it around earnings. There's all of these dynamics, guys, that are beyond just the technicals. You can go watch a video on gamma and options, okay? But you're not going to learn how to deploy it and how to make money with them. 90% of all call buyers lose their money. There's a reason. They don't have an edge. They don't know all those things I was just talking to you about. And hell, everybody loses. I lose on an option trade once in a while. Probably have an 88% success ratio, but that's all right. I can have a 95, but guess what? I'm going to do even lesser trades. So sometimes you just scale back and say, I want the perfect one. And I have up in the 90 and a half, 95, 98%. But then I'm so particular, right, that I leave money on the table, because I could be taking others and getting an 80% and having a much broader amount of money. All right, guys, that's enough on all of that. I hope you enjoyed this. Happy Thanksgiving week to everybody. I need to go. The markets are going to open in a couple hours, guys. All right, this is Bruce with Targeted Wealth Creation, not financial advice. All right, guys, bye for now.